Hello, Chad Payne here, investment advisor with Security First Asset Management, with our weekly market recap for the week ending February 7th, 2025. It was great to see a lot of our clients at our client appreciation event recently, and we hope to see you again at some upcoming events. We have the food truck and shred that'll be on the horizon. Keep an eye out for that. But also, we have going on our first quarter drawing for a $100 Lowe's gift card for anybody that refers friends or family to us. Your name will be put in for that drawing that we will that we'll do at the end of the first quarter. So make sure you get involved with that. So last week we had a lot of headlines going on. Our administration's made a lot of headlines since it's gotten started here, and only in a few weeks. But overall, our markets were down slightly for the week. A lot of that was driven by tariff discussions on Mexico, Canada, and China. Some of the Mexican and Canadian tariffs were postponed at least for a month, but there's still kind of a cloud sort of looming around that as it sort of frightens markets with that uncertainty. Um, Corporate earnings, though, however, were good overall. Of the companies that have reported so far on the S&P 500, 77% of those have beat their expectations on fourth quarter earnings. So that's a positive for the markets and still kind of keeping things going well. Overall, the manufacturing index, ISM index data was positive as far as growth goes for January, but they acknowledged that the looming threat of tariffs was a huge threat potentially for manufacturing recovery ongoing. So threats out there for tariffs in many different directions, it seems like. Our labor markets are still good, but they seem to be cooling a little bit. We did add 143,000 jobs last month. However, that was little below expectations. The unemployment rate did drop from 4.1 to 4%, though, so that was a little unexpected. That lowered. Initial jobless claims were slightly higher as well, so it does feel like things are cooling off just a bit in some cases. Also, jobs that are left open and are available have gone down in the last 3 months. So, also there was a trade deficit that was significant in January and in December. A lot of that seemed to be due to tariffs. People were trying to get their imports in before any tariffs were kicking in. So, had a pretty significant trade deficit, partly due to that. So we've got Valentine's Day coming up, the end of the week. Don't forget about that with your loved ones. And had a Super Bowl that just ended, a little bit lackluster. If you're a Chiefs fan, you're not so happy. Eagles fans are definitely happy. According to the S&P 500, the recent history says that when the Kansas City Chiefs were in the Super Bowl, the S&P 500 has averaged a gain of 21%, whether they win or lose, just as long as they played. So maybe that's a bright side for any Chiefs fans. Maybe we'll see some market ups for the year. Hope everyone has a great week. Don't hesitate to call if you have any questions. Thanks a lot.